What is good, guys? It's Rey-Jay back with another video, and this one I'm gonna break down what's going on with the overall market and also talk about some very important lessons we could learn from this price action and how I'd be going about trading something like this. Before breaking things down with all this information, give you guys any value about trading, I do have to mention a couple of things before starting. Firstly, I am not a financial planner, so take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. Anyways, now let's talk about the market, what's going on with this, and what could you learn from this price action. So when it comes to the way the market moves, you always have to remember that the market has different ways of being structured, and it's very important that we are open-minded when understanding the way it moves. Now, when I say this, I think that's very, very important that we're constantly trying to better ourselves, but you have to have a plan. Okay, you have to have a plan in mind, and you have to understand your risk management could be dependent on how large of an account you have and what your like risk management strategies are, and just all these different factors, right? So now let's break down something very important about the market. If I am trading, especially something like this, especially if you're looking at the charts in its current form, it is very important that you are open to what your plan is. You know what your plan is, okay? And when you have your plan, you should write everything down. So get out a piece of paper or go on like a Google Doc or something. I don't know what you want to do. Whatever you want to do, have a plan ready. So then you're going to be looking at your account size. How much money do I have? How much money do I want to risk into trading? If you only have like $5,000 or even lower than that, know that you shouldn't risk even half your portfolio or even like a quarter of it. You should be risking only a very small percentage of it for every single one of these trades. Very, very small amount. Have a fixated amount for trading for every single day and stick to the rules for discipline. So if you only could trade with, let's just say, like $600, $700 a day max, right, out of your entire account, you can only use like maybe, I don't know, $300 per trade or make very small trades with $200 each per trade and do like 3 or 4 trades a day, something like that, for example. And then have a cash account so that you could make the trades and then your funds could settle the next day and just keep on making like, 3, 4 trades a day. That is enough to make some very, very good money. And let me explain. So now that you have your like risk management in mind, you know how much you'll risk per trade, and you don't go all in on just like one trade because it can be very risky. Even the best traders make mistakes, and trades don't always go the right way. So, your psychological aspect of trading is very important. You have to understand that the market will do its thing, and we're just on the sidelines watching it. That's all we're doing. We're just on the sidelines catching these moves. We're hunting and not chasing. So, if I were to trade something like this, if my trade went the wrong way, well, I'm going to have a strategy so that I don't end up with the losing end in essence. So, what's an example of a strategy? Let's just say that I have a stop loss set, and it's very simple. If I lose like, I don't know, 10% on the trade, for example, maybe 15%, my stop loss is automatically triggered. But you also want to catch some like really, really good levels when doing it. But let's just say hypothetically that's what I'm going to go for, like a 15% loss and my stop is triggered. And if that's the case, how many times could I lose and how many times should I win for me to be profitable? So if I want to win, I should probably aim for like a 50% return on investment per every single win I make. Let's just say, for example, you go for that. Maybe 40%. If you have a 40% return is what you want on your wins, you could lose 10% 3 times. You could lose, a little bit more than that 3 times. But if you want to make 50% on your wins, you could lose 15% 3 times over and still be profitable if you're right only a quarter of the time. What do I mean by that? You have to understand your strategies and how to position yourself so that when you take losses, you try to get out quickly, you try to be very patient because when you lose, you want to be able to exit quickly and then take the loss fast and be able to identify when you're wrong and then make your losses small when doing it. Understand what that means. Make your losses small, make your wins big. So you have to understand these strategies very carefully and practice with them. So if you're looking at a trade like this, right? Here we have a very clean looking potential setup on SPY. All right. We have this potential bullish triangle like structure developed because this is starting off looking like a head and shoulders like pattern. Like this is probably the first thing I'd be looking at. But then I'm also noticing that we have this resistance here, so it could be interpreted as like a bullish triangle. So it's like two in one. And then what you could do is look at this like this, right? You have this resistance right about here. So like right here, you have this resistance area, and you will notice that, okay, and we also have this resistance at 440.5. How do you calculate resistance levels? Well, there are a bunch of different strategies. You could just look left on your chart and just keep looking to see where pre-market lows are and just things like that and different levels. Another thing you could do is just look at Fibonacci retracements, but I would prefer just look left on your charts, look for previous support, look for previous resistance, just for example, right? So we have this setup in mind, and we're noticing that it's making higher highs and higher lows, so it's looking bullish. Always be able to identify this. Now, what I would do though is I wouldn't just like have my chart like this. I would have a lot more technical signals. Like I'd probably use my like RSI and MACD, obviously, but um, when looking at them, I like to look at the 30 minutes time frame just for like extra safekeeping, right? And you want to know what is the trend looking like? Like right here, you can see the trend was more bullish on the 30 minutes time frame. So I'd be looking more towards calls if you have a trend that's like this. And on the 4 hour time frame, right, where is it? Right about here. Now the trend was still not looking the best, but the 4 hour in itself is not everything because if you want to scalp, if you want to scalp for the short term, you don't have to worry so much about the 4 hour. You're going to be worrying more about like the 5 minute, at the 30 minute, smaller time frames. But if you want to swing trade a much bigger move, the 4 hour and the daily will work a lot better. So you want to pay attention to all these different time frames and then keep this in mind. Before you enter the trade, am I going to swing trade? Am I going to scalp? Have this in mind. That's the first thing you want to remember. So you're eyeing the market, you're looking at this potential move, and you're like, oh, wow, it looks like it could start pumping quite nicely. If you have this vision in your head, the market's going to pump. What you want to do is have a set target. Okay? Have a set target. I think, hey, SPY might break 440.5. So then my target would be either it gets to like 441.5 or maybe even 442. The entire zone right there. You could pick either one of these, but for people who are more ambitious, you could be looking for like 442, like all the way up here, and then like try to take profits around this area. That could be a target from a breakout, right? That's a possibility, just for reference. So now you have all this information in your head. What are you going to do? The number one answer is going to be patient and see, could we break this resistance? We're on a nice uptrend, right? Making higher highs and higher lows. I showed you guys the 30 minutes MACD was bullish. The market is showing some strength. The news that came out, always know what the news was saying. It was very, very sideways. It wasn't really bullish or bearish. So the market could go in either direction. I was looking choppy in the beginning, but there's a potential breakout that's possible. If it broke below this trend line, right, you would have a stop loss set just in case. You'd envision this support right here, this like 439.7 area. You'd be watching these supports very carefully to know where you should set your stop, and you'd calculate all of this beforehand. But then once you have the trade in mind, once you know where you want to take profits, you're going to wait, wait, wait for that confirmation. Is it coming? It's trading sideways. Oh, we're getting a bullish break. Like right here, this candle could have been your signal. We're getting a breakout. The breakout's here. Some people may even try to take it off this back test. That's another possibility, but there wasn't enough confirmation yet to do that. And either like this breakout right here, this bullish candle could be some people's entries. Some people would just wait for it to break resistance at 440.5. Those could be some good bullish entries. Why would you be favoring the bulls? Because of the 30-minute MACD. That's one of your technical indicators. Okay. And the reason I'm not showing the MACD is because I wanted to zoom in on this and show this more clearly. That's why I'm not showing the MACD on here. Once again, guys, just to show you, like if you go on Webull, you could see the 30-minute time frame was more bullish during this time. So the MACD was looking like this. I'd be looking, maybe we're about to get a breakout. The calls look a little bit more enticing. Okay, so that's your 30-minute time frame. We're not going to look at the MACD right now. We're just going to look at the price action. And then we have this bullish triangle-like structure that developed, right? You have to know your patterns very well. You could see it was developing like this. Now, some people could argue maybe this is like a head and shoulders that's developing. Maybe that's a possibility too. So I'm like double-minded just to be safe. If it's the head and shoulders, what's the possibility of that? You want to see this thing break below this support right here, below 439.69, and this thing would start tanking a lot more. But if this is a bullish triangle, if it truly is, it was looking a lot like it. We had a lot of symptoms of it. We made higher highs and higher lows. We want to break this high right here. We got a false break here, a back test down here, a bounce off the trend line. And we got this bullish looking candle. This right here was a very bullish breakout right here. That's your entry. You can enter off the breakout right there or very close to it. If you're very confident in trading and more experienced, you could enter at this like back test right here and this like bounce, or you could enter at the breakout somewhere around here. I mean, there's so many different entries depending on the person, the risk management, etc. In my opinion, you would enter calls, right? Or do any other long position you could think of that is valid and something that you could do while managing risks. And then when you enter the calls, the market starts pumping. So you're going to be watching what's the volume? Do I have my stop ready? You have everything set just in case. You have all the possibilities in mind. So even if it broke out, it was a false break, it breaks down. So even if it did something like this, hypothetically, okay? Let's just say this happened, right? Let me bring up a drawing tool. Let's just say that like, oh, we got this false breakout. I entered calls right here. Well, I have a stop set at this low right here. So even if it broke out like this and it broke down like this, it was a false breakout. I got trapped. I have my stop loss to stop me here. Or if I was down like 15%, I could have another stop loss to save me just in case. If you want to do it the numerical value way, both of those could work very well, right? Depending on what you want to do, both of those could work very well. Whether you want to catch this low or if you want to do a 15%, it could be either one of those. But your stop loss needs to be set to save you in case this thing went the wrong way. Now, it was looking very unlikely, though, seeing how strong it was with the volume. You can see the volume spike right here. That was a good sign. As the market continued now, let's just say you have your calls, the market broke your resistance at this 440.5 area. What are you going to be looking at now? Well, before I got into my calls, okay, I saw the resistance break. I also saw a potential golden cross on the 5-minute time frame, like right here, developing. That's another like signal you could use with the 15 to 200 EMA. As the market started pumping, I have a target in mind. My target could have been like 442, for example. Let's say my target was 442. Market starts breaking and breaking and breaking and breaking. We get a very, very bullish break above 441.5, and it still looks bullish. So what you could do is raise your stop loss if you're able to do that in your brokerage account, or have your finger on like the sell button, have it like on top of it, not like actually touching it, right? Don't sell yet, but have it ready just in case, whatever you want to do. And then watch it. You're prepared to exit as soon as the time is right. You're watching it carefully. You're very patient. And the more it goes up, you could start riding it higher and higher and higher and say, hey, it went way above my target. You could ride this thing all the way up here because you could notice that this thing became very choppy at this 442.56 area. That could have been like another like a red flag about this rally. The market starts to struggle around here. So you could have just taken profits there if you wanted. You could have been up over 100% just off that breakout alone, depending on the type of options you had and your delta and etc. But basically, right, you don't have to always be like too fixated on just one specific target. Sometimes you could take profits a little early, sometimes a little bit late, but typically and generally, I'll be watching this like 442 area, for example, as my take profit level, just as an example, right? And I'm going to be watching this. How did I calculate 442? Well, I'm looking at how strong the breakout is. I'm watching support and resistance levels, and then you also have this level right here, this resistance right here, this like 442.5. You also have 442 right here. These are some like resistance levels right here. We know the market may become choppy once it hits like these levels. So study previous supports which become resistance. So right here, like 442, you can see right here. Let me just show you where my cursor is. So these are just some examples. I'm not including the extended hours just to make this as simple as possible. So like right here, this was previous support, like 440, almost 442 around there, right? All right. And then we also have it right here, 442, support zone right here. So I know there's going to be some resistance at 442, and historically that is the resistance on SPY. So that could be your take profit target, for example. If it broke above that and started just continuing to go, another take profit area would be like right here, 442.44. Sorry about that, guys. Because right here, when you zoom into the chart, we made another higher low right here. And this is another like support area. That's like 442.4 zone, like around there. That could be another take profit area, right? But you want to watch the chart in real time and see how it's reacting. Look at the candlesticks and determine where you want to take profits. But you have to have a target in mind before you enter the trade. You need to know, where am I going to enter and exit and take profits, right? You need to know all of this before you even enter the trade. So that's why I'd be watching like 442 around there. I'm going to say that maybe that's where I'm going to take profits. If it went all the way up here, it's still a gain. Even if it went higher, a gain is a gain, profit is profit. Do not be too pushy. And you could aim for 50%. You easily could have made 50% off of this move. It was very, very bullish, right? Easily 50 plus percent or even higher than that. And that is how I'm profitable. That's how you become a profitable trader. You position yourself so that you try to make your wins big. And maybe I could have noticed that, hey, the market's not done yet. I don't have confirmation of the market breaking down. Maybe I kept holding on through my target level because I know the market will go higher. If you're more experienced, you could do this. I just keep playing it. I keep holding it and watch my calls get even more premium. And then I exit for an even bigger gain. So I can make like 70%, 80%, 100%, right? But then the loss I could have got, it wouldn't have been 100%. It wouldn't have been 80%. I would not let that happen. Because if this trade turned around and went the wrong way, my stop loss will save me. I could even manually do it if it's a very fast trade. Sometimes you don't have time for a stop loss. Sometimes that happens. If you're very, very fast for a scalp, sometimes that can happen. I'm going to be honest. But you're always prepared and you're always very careful. Those 0 day to expiration options tend to be riskier, so be very careful with those, especially on plays like this, and be very quick to take profits on those. Those are risky, so be careful with those. And just know, watch setups like this. Watch for potential like back tests, which is when you could take your entries, and watch for potential breakouts. That could be another potential entry area, and have that target in mind. Once you make your money, if you take a profit, don't lose your mind and let the dopamine rush get the best of you. Because if you keep on letting dopamine fuel your trading, it is going to negatively impact you. What do I mean by that? Wins could be losses for you. Why do I say that? If you keep winning too much and you become overconfident, that could lead you to overtrading. That could lead you to making bad, irrational decisions. And if you're just chasing for huge wins every single day, it's not going to work out that way. Some days you're going to have flat days. Some days you're going to only make 20, 30%. Other days, overall, you may make 100 plus percent on your wins. It all depends on the market and so many different factors. Be unbiased and do not let your emotions get the best of you. You need emotional control. Don't become unhinged. Be calm, cool, and collected. I keep reminding you, be calm in all these situations. A person that is strong could become unhinged and act like they're the biggest person in the room, right? But a person who is stronger may have the ability to not become unhinged and just yell at people, but to control their emotions, control themselves, and be the silent one who acts as the smaller person, yet in essence, they're the bigger person because they control their emotions, they dictate their own decisions, and they have more power over their lives. All right, guys, so I hope that there was some value in this video. Have the target in your mind, secure profits. Sometimes you have to do it fast if you become like uncertain, for example. But always have a target in mind and aim for that target. It may not always work out that way. Sometimes like unexpected things can happen. It happens. So it's okay to like even exit a trade early in case worse comes to show, such as like taking profits if it just goes the wrong way or something else happens. Have stop losses set, be very careful, watch it carefully, and aim for your target to be met. It's not always going to be perfect. It could be like 20 cents away, it could be like 20 cents above, but typically you should aim for it. Secure profits, Journal everything and then be honest with yourself to maintain those disciplinary practices because it takes discipline to really grow money. If you become too confident, you could blow everything away. All right, so that's just like some, those are some words of wisdom I have for you guys. Hopefully, I help someone, and I want the best for everyone, okay? Please enjoy your weekend. Have an absolutely spectacular rest of the day. Market to the moon as the long term is still incredibly bright. And peace out.